I am curious, Ken. I mean, I was going through some of the transcripts from what you guys talked about yesterday, and no surprise here, a lot of folks still concerned. But I wonder if you could kind of square that circle, because you have some folks on the kind of fringes of finance right now that are still fighting to block some of these rules. But then you hear from folks like Steinhauer over at Huntington, who I guess is just kind of resigned to it. It's like, this is going to happen. We need to prepare for it here. Is there some sort of middle ground here that we should prepare for? Are there going to be changes?
Well, I think if we take, first of all, thank you for having me on. I think if we take Chair Powell at his word, and I do, that there are going to be substantive and material changes to the rule, rule proposal, I think that's a good thing, and even possibly a reproposal, which Chairman Powell didn't rule out. And you saw, if you saw our panel yesterday, our conference yesterday, Governor Bowman from the Fed said there should be a reproposal. We think there should be a reproposal. And I think the difference in Huntington's a fabulous institution, by the way. I think the difference is what type of business is your bank in, and the larger dealer banks are really negatively affected by this. So while I think most large banks, if not all large banks in the U.S., including from Huntington on up, certainly have very high capital levels well before the Basel III proposal was put out. Mm-hmm. It's the structure of their business. So if you, and what we're particularly concerned about is the impact on the capital markets business. And if you look at particularly the U.S. G-SIBs, they are dominant players in the U.S. capital markets business along with the foreign G-SIBs. And that's going to be very negatively impacted by the proposal, with capital charges going up as much as 130% on traditional products like securitization or securities financing transactions. So that's really where people need to focus.
And I think a lot of people are focusing on that, Ken. Just to play devil's advocate, though, I think some of the folks who backed this proposal, which was formally unveiled last year, look at it and say, look, this is about making the financial industry safer, preventing bank failures, or at least sort of, trying to sort of stem the potential for those failures here. As this proposal stands right now, does that not do that?
Well, I'd start with the premise that we made the system more stable to where we are today. This Basel III Endgame proposal has been 10 years in the making, but over that time, we've seen bank capital grow exponentially in the U.S. And so I think in terms of aggregate capital, we've really hit the target of where we should be. What the problem with this proposal is not just the total capital it raises on the overall bank, but again, what it does in the capital market side, and then how it interacts with existing prudential requirements and liquidity requirements, such as things like the stress test and something known as the global market shock. And when you put those together with this proposal, you really do impede capital markets activities of the large dealer banks. And the problem with that, as you know, is we fund 75% of commercial activity in the U.S. through the capital markets. That's a good thing. But that's going to have a transmission effect if you raise capital costs by the level that's being talked about, the way this rule plays out. So that's why it definitely needs, frankly, in our view, a reproposal. The Fed and the prudential regulators are only now doing a quantitative impact study, which they should have done before this proposal. They need to put that out for comment. We believe they will. And they really, if they are going to make material changes, they really need to put the whole proposal out for additional comment.
So this is 10 years in the making. The Fed has already made clear that there will be changes. You're talking about a reproposal. Is the goal here to just not propose anything, to kind of keep what we have?
I think the goal here is to get it right. And if you think about it in terms of how Basel III came, the iterations of it, the Basel Committee itself went through a reproposal because they put out an initial proposal. They did a quantitative impact study. They realized that they needed to do another. Then they went and reproposed and rewrote the proposal. It was supposed to be a capital neutral proposal and really trying to equalize capital across jurisdictions around the globe. But what the Fed and the other agencies have come out with doesn't do that. So a reproposal is a process of getting it right. It's not unprecedented at all. And frankly, I think if the agencies had done their quantitative impact study on their proposal before they put this out, they would have been in a better place. But again, it's about getting it right, not getting it done fast.